We're going to cover taxes in this one. And if you are ready to comment down below that you don't pay taxes because cryptocurrency is anti-government, do me a favor, smash the like button and watch one of my other videos. I'm really proud of them. But for anybody else, stick around. We're going to cover taxes in this video. So to get started, I'm not a tax professional. I'm not an accountant. You should definitely seek a professional if you need some help doing all this. But the IRS does have guidance out there for what to do with cryptocurrency taxes. That's what I follow. And in this video, we're going to go over some of that guidance. We're going to go over some resources and tools I use to make taxes really easy and automated for you so that you don't have to do a lot throughout the year to keep track of all of this stuff. We're going to cover cryptocurrency in two ways, both the owning of cryptocurrency and perhaps trading, and then also the mining of cryptocurrency and the benefits of running your cryptocurrency and mining operation, as maybe small or large as it is, as a business, which is exactly what I do. So let's get started. To own cryptocurrency, if you just go buy cryptocurrency and do nothing with it and just hold it, you don't know any taxes on any of that. And that's one of the ways to get crypto, and that's what we're going to cover right now. Buying crypto. If you take your native fiat currency, in this case US dollars, and just buy cryptocurrency on Coinbase and do nothing else with it, you owe no taxes on that. The second way to get cryptocurrency, which is by mining, you do owe taxes on that because it's treated as a taxable income, just like a paycheck that you were going to get from your 9-to-5 job. The government's taking their cut, the state's taking their cut out of that. That's not happening when you're generating virtual currency, cryptocurrency income. So you do owe income taxes on those earnings, and we're going to go deeper into that in just a little bit. But for trading, which miners will do, and people who just buy cryptocurrency likely will trade their cryptocurrency, whether back to their native fiat currency or to another cryptocurrency, and you will realize what is called a gain, a capital gain, and they could be either short-term or long-term, and that can be different depending on your income tax bracket and your specific situation. But there is going to be a taxable event that occurs when you trade it. And again, that is either going back to what the IRS will call a real currency, which in this case we'll use US dollars, or that also is converting it over to another virtual currency. I want to cover that right now. This is guidance from the IRS. Will I recognize a gain or loss if I exchange my virtual currency for another property? Yes. If you exchange your virtual currency held as a capital asset for another property, including for goods. So if you sold your Bitcoin to buy an ASIC miner, you're going to actually realize a gain or loss when you do that, or for another virtual currency. And in that case, if you maybe sold your Bitcoin for Ethereum, there's going to be a gain or loss that occurs there. And that can be really, really tricky. And it's good to be mindful of where you're at with what you owe on taxes and just knowing your capital gains and losses, especially if you're trading a bit or if you're doing a large volume trade, for example, because what might happen is you could end up in a situation that I've seen a lot of nightmare stories out there where what you owe in taxes is actually more than what you now owe in cryptocurrency because of the volatility of the market. So let me just give a quick example of this. Say you bought Bitcoin, one Bitcoin, and it was worth $10,000 at the time. And then Bitcoin goes up to $60,000 and you have realized a $50,000 gain on your Bitcoin. And so now you decide to sell all your Bitcoin and buy Ethereum. Because you're converting from one virtual currency to another, you have a $50,000 capital gain that you owe either short-term or long-term capital gains tax on. Say you then hold the Ethereum and the market drops, and the Ethereum and your whole portfolio is now only worth maybe $1,000. What you're going to owe on that capital gain tax, again, in US dollars, because that's what the IRS is going to take, could be more than your actual cryptocurrency portfolio is worth. Keeping track of your cryptocurrency taxes isn't easy, so there are some tools and resources that I use to make it very easy for me and work towards getting everything automated. And one of the tools that I've been using my entire time in cryptocurrency, about 6-7 years now, every year, is CoinTracking. I have an affiliate link down in the description below if you want to use it. And I really use this, and it generates my tax report every year that I for me, put right into TurboTax, but you can provide it right to your accountant as well. And so they have a demo, and I'm going to show you how you can do all this stuff manually, or how they have automated systems to make this as easy as possible for you. With, I think, the goal of just having to do pretty much nothing throughout the year and just clicking one button at the end of the year to generate your tax report. But they do have some options to enter coins manually, and I want to show you how to do that. And so you can come over here and enter a new cryptocurrency, and we're going to do a trade. And we're going to say this trade happened a little earlier in this year as I'm making this video, and we're going to say that I bought 1 Bitcoin. And you can see all the cryptocurrencies they have. Now, what's really cool is they have the asset value. They have the price of Bitcoin at that time, exact time that I bought it, which it needs to calculate all your capital gains or your income if you're doing mining. And in order to buy that 1 Bitcoin, I had to sell some US dollars. So we're going to say I had to sell 41,051 US dollars to get that Bitcoin. And we're going to enter in US dollars here. And then I'm just going to hit add. And that's it. Now I've got one transaction here that has occurred in the selling of US dollars and the buying of 1 Bitcoin. What I can do next is I can do a trade. And maybe this trade happened a little bit later where I now sold that 1 Bitcoin. We're just going to use today as recording this video. And I've definitely realized a capital gain here because I'm selling it for almost $20,000 more. And let's see how much ETH it takes to get to that amount, just for our example's sake today. Yeah, so let's say around 18 ETH is what I bought when I sold that 1 Bitcoin. And I've added that transaction now. And what it's really smart at and what it's going to do is just keep all those transactions in place and in order, so that when I come over here and generate my tax report, it can do all the calculations that it needs to know how much my capital gains, either short-term or long-term, were, or in the case of mining, how much my income was. And so while we're on the topic of mining, let's show you how to do a manual entry for that. And then I'll show you how you can do some automation on all of this. So it has a bunch of different options here for transactions. You can see staking, airdrops, even liquidity mining is on here. Margin is on here. Interest is on here. It's just like everything. But in this case, we're going to do mining. And we're going to say that I mined, just go with my dream of 5 Bitcoin. And I can say I mined 5 Bitcoin. It knows the value of the Bitcoin at the time that I mined it, which is a lot of money. And we're going to add that here. And now that it's categorized as mining, it's going to treat that as income. And so it will generate my tax report, taking that into the equation. So there's also things you can do to make this as automated as possible. So I'll highlight some of those right now. These are all the exchanges that support automatically importing all of your trades or your deposits. And so, for example, I have my Coinbase linked to it via an API. And if I mine Ethereum Classic and the pool pays me out right to Coinbase, it automatically pulls in that transaction, categorizes it as mining, and there's nothing I have to do. It also has some wallets, popular wallets that are supported. And then it even has some cryptocurrency blockchain supported. So for example, it has Firo. And so it just knows my wallet address for Firo and will look at the blockchain for any new transactions and automatically import them too. And if automatically doing imports isn't supported for the wallet or the cryptocurrency that you're using, it also has the ability to do CSV imports. And I do this, for example, for Flux. When I'm mining Flux over to my Zelcore wallet, I'm able to export a CSV right from there, format it in a way that CoinTracking likes, and then import, hundreds or thousands of transactions all at once in just seconds. So I've been using this forever. It's got everything that I've ever done in cryptocurrency on my account. And I really, really enjoy it. So again, affiliate link is down in the description below. And that's just scratching the surface of what this website is capable of. So I hope you go try it out and check it out. So what we're going to do now is shift the conversation into mining and answer the question, what does the IRS say about mining cryptocurrency? And so they have this answer on their website. Does a taxpayer who mines virtual currency realize gross income upon receipt of the virtual currency resulting from those activities? Yes, when a taxpayer successfully mines virtual currency, the fair market value of the currency as of the date of receipt is included in gross income. So You mine 1 Bitcoin. The moment you get paid out that Bitcoin to a wallet that you own, the value in US dollars of it at that time is your income. And then you owe taxes on that. We can go a little bit further, and this is when we'll talk about running this as a business, which is what I do. Is an individual who mines virtual currency as a trade or business subject to self-employment tax on the income derived from those activities. If a taxpayer's mining of the virtual currency constitutes a trade or business, and the mining activity is not undertaken by the taxpayer as an employee, so you're not working for somebody else, the net earnings from self-employment, generally gross income derived from carrying on a trade or business, less allowable deductions resulting from those activities, constitute self-employment income and are subject to the self-employment taxes. So what this means, and I'll tell you what I do, and your situation may be different, but I run my Red Fox crypto mining and YouTube business as one big business. And I'm the sole proprietor of that business. I'm not an employee of the business. It's mine. I own it. I run the whole thing. And so the income that I generate from that requires me paying taxes on it. And it requires me paying self-employment taxes on it. But what you can do, and we'll go over this more in just a little bit, is you're also putting money into your business. And so you can take the amount of income that you've generated and use the amount of money spent on the business, maybe in hardware, electricity, and offset what your actual earnings are for the year that you owe taxes on to the US government. And so the way you can do this, and I have a spreadsheet here to help illustrate, is you can take your hardware and any other expenses, and I'll go over a couple examples. So in this case, say we have 2 RTX 4090s, and that were bought in that year, and that cost $3,200. That's an expense. I paid that to go into my business. Now let's say I also burned for just mining $2,000 in electric that year. And I can make a whole video. Let me know if it's be helpful to you on how to calculate the electricity that you're using for mining, especially if you're doing it residentially. So in just those then, my 2 expenses, really simple example. I out of my pocket, probably from my personal income, paid $5,200 and I put that into my business. Now, in mining, we'll say it was a good year. I don't know how I did it, but I generated $10,000 in income that year. And again, this is at the time that the cryptocurrency became into my possession. So for most people, it's when the pool has paid you out to the wallet that you own. What was the value of the cryptocurrency at that time? So we're going to say it all summed up to $10,000. So now what I can do is I can take that $10,000 of income and I can subtract out my expenses and get my actual business earnings for the year, which would have been $4,800. And that will be my taxable income, and I will owe taxes on that. So there's a lot about how to run a business, and this is no different than how you would run any other business. For me, I'll give a couple examples. In my early years of mining, I was just growing slowly and running at a loss every year. I would not come out ahead. Cryptocurrency also wasn't paying me that much those days. So I would come out, my business would run at a loss, and that was okay. Some businesses do that for their first several years while they establish themselves. And then when everything really took off last bull run, I was making a lot of income and I was putting it all back into the business. And that's when I expanded my GPU mining farm and my YouTube channel and everything else. And I took all of the income, almost all the income that I was generating, and bought more equipment and just put it right back into the business. And it came out at the end of the year with a little bit of profit, but I didn't owe much in taxable income because what I brought in and then my expenses, they were pretty close. And that's a great way to expand your business and put money back into it and not owe taxes at the end of the year, or if you do this quarterly. But then at some point, you've grown your business and you're satisfied for where it is, and you want to take a paycheck and realize the hard work that you've done. And what comes into play there is just knowing how much taxes you're going to owe. And that's why most businesses, from what I've seen, not an expert, by the way, do this stuff quarterly. If you're going to be taking income and you want to give yourself a paycheck, you want to buy, your wife a nice piece of jewelry or something with the business earnings, just take into account that you are going to owe taxes on those earnings. And depending on how much income you're bringing in, it can be a significant amount. So best practices, keep track of it quarterly, and make decisions if you want to take that big paycheck or if you want to roll that money right back into your business. So though, know that you do owe taxes on cryptocurrency mining, and I'm speaking specifically for here in the US. There's a lot more that can go into this, and you really want to keep track of all of these things. I use QuickBooks linked to a business specific credit card. So everything that goes on there gets categorized as business for all my expenses. I use CoinTracking to keep track of all of my mining and any cryptocurrency buying or trading. So really at the end of the year, I have one piece of software that's got everything I spent and brought in, like YouTube wise, affiliate link wise for business. And then I have another support with CoinTracking showing me everything that I brought in for cryptocurrency specifically. I just take those two, put them together, put them in TurboTax, and it helps me decide what I owe or don't owe in taxes that year. And again, best thing to do is don't be surprised at the end of the year. Take them from me. You don't want to do that. Really keep track of this stuff, and it'll help you make the best decisions as the year goes on. Hope this video is helpful to you. Please, if you need some help, go seek a professional. But I've been doing this myself, not saying I've been perfect, but I've just used all of the public guidance that's out there, and I've used these applications to help me along the way. So, hope it was helpful. If it was, smash the like button, sub to the channel, and as always, please take care of yourself and each other, and I'll see you in the next video.